Let's get across the market open now. David Scott joining us from StoneX. Scotty, good to have you back on the show this Thursday. Let's start stateside. We did get those latest growth numbers. In fact, the economy shrinking for the first time in 3 years.
Yeah, a negative 0.3% decline coming through. Not really that big of a surprise to markets, but what was underneath the surface though, just some wild component moves. In particular, when it came to front loading of demand, when it comes to imports in particular, ahead of that Liberation Day deadline in early April. So you can see there, that's a composition breakdown of what we saw amongst that 0.3% decline in GDP. And look at the blue bar, that's inventory. Oh, that's their import, sorry. They were up 41.3%, and that alone lopped 5 percentage points off GDP. So we saw the inventories increase, and consumer spending as well was pretty decent, although that again likely reflects the impact of front-loading of demand pre-tariffs.
Yeah, obviously those businesses trying to get ahead of those tariffs in terms of when the costs are going up. Scotty, also look at the PCE there, price index. What did you note?
Yeah, the PCE was an interesting one because we'd seen two pretty chunky increases coming through earlier in the quarter. And then this one was completely flat. And so we know that the markets get very excited when we see weak inflation reports coming through, that it might go and spur bets for Fed easing. But at the same time, we saw that income data held up pretty well and consumption as well, 0.7% increase. Again, probably reflects some front loading of demand. But really interesting what we'll see is what happens next when we start seeing the subsequent months for the inflation prints. Will we see a pickup coming through due to tariffs? Or will weakness in the economy start to offset that? And that is the real concern at this point in time. There is now clearly a degree of thinking out there amongst markets, traders and investors that we might go and see growth really start to go and drop away, which would go and limit any increase in inflation.
And Scotty, what are we seeing on the jobs front at the moment, the latest read being there in private employment?
Yes, ADP National Employment Report doesn't have the best reputation, but if you look back over time, its track record of mapping towards private sector hiring in the payrolls report isn't too bad. And a 63,000 increase is one of those hard economic data releases we're all hanging out for right now. And that is very, very soft and certainly not enough to go and prevent unemployment from going up if it materializes in the actual official government figures. So we'll see what payrolls comes out on Friday. That's one of those first warning shots across the bow that potentially we've seen a pothole starting to go and form in US economic activity.
And what are you seeing with wages growth at the moment? I think up 0.8% in the first quarter compared with 1% the prior.
Yeah, it was a decent result. But the thing when it comes to wages data, it's a lagging indicator of what's going on with the labour market conditions. So I'm not really concerned about that. It's more so how we're going to go and see it moving forward. 0.8, 0.9% is still pretty decent, still kind of relatively above the levels you'd go and expect to go and see to go and keep inflation around 2%, as long as there's a bit of productivity growth coming through. But again, we'll have to go and wait to see what the next quarter's figures are to go and get a truer read of exactly what's going on.
So, given that weakness we're seeing in growth there and perhaps what's ahead, obviously there are those calls as far as the Fed is concerned to cut further. What are we seeing just in terms of the fund curve there?
Yeah, at one point last night, we saw 4 full 25 basis point cuts priced into the Fed funds futures curve. Now, right now, that's backed off a little bit at this point in time. But clearly, relative to what we were talking about in January, there has been a huge increase coming through. Now we're looking for 4 cuts. That's a lot. And that particularly in an environment where we're talking about stagflation, clearly, based on what we're seeing in that particular metric, we're seeing traders, investors now favouring that we'll see a really pronounced growth slowdown that will go and get the attention of the Fed, not anything to do with the inflationary pulse and tariffs.
How's this playing out for treasuries at the moment, Scotty?
Yeah, treasuries have been on a wild ride. Anyone who's been trading them in April would know just how much of it, it's been crazy. Some of the moves that we saw early in the month were wild, and we're seeing a big snapback right now. It looks pretty decent on the charts. If we just went and looked at the price action, we're seeing a really strong rebound. There's a couple of things, though, that I'll go and note. We're in a pattern, and there is some technical, and you can see here that I've gone and put some indicators here that go and show that it does go and move in line with what technical indicators suggest. We've got overhead of resistance right now at 115.090. That's a very key level on the top side to go and keep an eye on. And we also have a rising wedge. Now, rising wedge is a continuation pattern which suggests that we could go and see renewed downside coming through. If the price goes down of bond futures, it means that yields are going higher. So don't get too excited about the prospect of a sustained bid coming through in bonds and lower yields just yet.
Now, Scotty, of course, meanwhile, we are in the midst of earnings season out of the States. 4 of the Mag 7 reporting this week. Overnight, we saw Microsoft and Meta reporting after the bell, coming in ahead of expectations there. Look, it was more, not so much on the effect of tariffs, but the AI spends that investors are interested in.
Yeah, so we've still got those tailwinds coming through and clearly just breezed past expectations, and that's gone and seen a really nice bounce coming through in Nasdaq 100 futures. But I'm more interested in what we see tomorrow after the closing bell. Apple and Amazon, much more directly exposed to the tariff side of the equation when it comes to US trade policy. What can they go in insights can they provide us? What we're seeing so far in Q2. That's what I'm looking out for, because right now, anything to do with Q1 is just going to be impacted by front loading of demand. What is happening next is going to be key.
All right, let's come back home locally then. Scotty, what are you seeing as far as the ASX is concerned? We're almost back at those levels prior to Liberation Day.
We are. It's been an incredible snapback like we're seeing in so many other markets around the world. But right now, bulls have a really key technical test in front of them. So we have the 200-day simple moving average at 8142. That's the red line you can see on that chart. And you can see back over time, the price has bounced off that in the past, then it's broken it. What will going to happen on this occasion? We also have resistance at 8135, again, above where we sit right now. And we also have an uptrend running back from October of 2023. So a really key resistance zone just overhead. And clearly, there's still a lot of risks out there right now. We've had a really incredible run. Can we go and push through that barrier over the course of the day? That would go and open the doors to record highs. I don't know, mate. There's a lot of risk still out there. I favour the potential we could be looking at least a minor pullback in the near term.